Jason, good to see you. I really like today's topic, money market funds, the hottest investment that may end up costing you. Following several rate hikes by the Fed, money market funds are earning 5% or more right now. They're so attractive, investors are pouring a near record $5.6 trillion in money markets right now. While these seem like safe investments, I'd like to ask about the opportunity cost of putting so much money in cash.
Sure. So money markets are often considered, a cash alternative, if you will. Relatively, very, very low risk instruments. Very few times in history where money markets have actually lost an investor money. But the problem with the money market, as is with things like savings accounts, checking accounts that bear interest, or even certificates of deposit, is that there is what my father used to refer to as the silent thief in the night, and that is inflation. And
Mm,
not to mind, in addition to that, we also have taxes. So once you take, you put the money in, you get a certain return on that cash, that's your interest. Well, now you have to pay tax on that interest, and then inflation eats away. And oftentimes we're either treading water, or actually we're losing purchasing power, actually going backwards by having money in these instruments. Now, does that mean that using a money market is bad? Of course not. It's a tool in the toolbox that just needs to be used at the right place at the right time for the right reason.
So then what questions should I be asking myself when deciding how much of my portfolio should be in cash?
The very first question is, how soon do I need to use this money, or how much access do I need, and what am I willing to pay to get that access? So there's often what we refer to as a price for liquidity. It's either you have to take on risk, or you have to sacrifice return and potentially lose purchasing power to the effects of taxes and inflation. So it really
Right.
comes down to, what is the purpose of the dollars that you're considering putting into these instruments? Because if the idea is, look, I'm probably not going to need them, uh, you know, anytime in the near future, they're really for, just long-term growth, then a money market's not going to be the right instrument. But if you're like, hey, I'm probably going to be making a major purchase in the next 3 to 6 months, money market is probably the perfect place for that.
hmm So I think another reason why money market funds are so popular right now, Jason, is that we feel terrible about the economy. Consumer confidence, again, at a really low point.
It really is, and when consumer confidence wavers, what happens is people often are looking for these, and I'm using air quotes here, safe havens, right? They start looking at savings accounts, certificates of deposit. Should I be buying gold? There's lots of, hubbub out there in the market, that when consumer confidence gets in the downward movement, that's when all of a sudden you start seeing all these ads pop up for, hey, put your money in this safe place, put your money in this safe place. And
Right.
it's really just these companies that are preying on investors' emotions. And that's where we come in, where really our job is to help take the emotions out of the investment decision making process. Again, not that these instruments are bad instruments, they're tools in the toolbox that just need to be used at the right time for the right purpose.
Right. You have said before that building a well diversified investment portfolio is the best way to preserve purchasing power over time. Also, often your best hedge against inflation. As we can see here, this is a great visual. Returns from 81 to 23, money market funds versus bonds versus the S&P.
Yeah, this is a really great, chart. It's granted, this is a very generalized
Yeah.
statement here, but what we know based on history, and history does tend to repeat itself, is that your best hedge against inflation is being invested. It's being invested in the stock market, whether that's you're using the S&P 500 as a benchmark or some other stock market index. At the end of the day, we know that that's our best hedge against inflation. It's our best chance. However, that doesn't mean that you should put all your money there. Again, the stock market, just like money markets or CDs or savings or annuities, these are all, again, just tools that are in that toolbox, if you will. And you just have to make sure you use the right tool at the right time for the right purpose. And that's where working with a fiduciary, somebody who can advise you on what's in your best interest, and also somebody who has the credentials and the experience and the knowledge and the expertise to navigate the tax code and dovetail together
Right.
your insurance, your legal, your investments, your tax, and make that all sing from the same sheet of music. That is the key to success.
Right. Well said. Jason, thanks so much for this kind of peek under the hood with these money market funds. I found a lot of great information in it. Thanks for your time.
My pleasure.